I'm going to show you how you can stop blowing your prop firm accounts. There's no BS, no fluff. This is straight strategy on how you can no longer blow prop firm accounts and actually work your way into a live account with whatever prop firm that you're with. This is a real strategy video that's going to help you stay in your prop firm funded accounts and keep from having to go back and doing evaluation after evaluation after evaluation. I'm going to show you how you can keep yourself in those prop firm funded accounts. Guys, as a reminder, I do go live on this channel. I am taking a small break from going live, but I will be back here in a couple of weeks going live, day trading live in front of you, trading the NASDAQ. You'll see my full tilt moments, my green moments, my red days, absolutely everything. So subscribe to the channel to get more of that content. And guys, be sure to take just a second out of your day to like the video. It helps the channel more than you may think. The example I'm going to go over in this video, I am using TopStep X. This is TopStep's platform called TopStep X. Kind of weird saying that back to back, but if you want to check them out, be sure to click that link in the bio and get an account with them. Guys, let's get into the video. I'm going to share my screen here, go over the front monitor. I'm going to show you guys a real strategy on how you can avoid blowing your prop firm accounts. This is a combine. I actually just passed this combine. The profit target was 159,000. I actually hit that today in their TopStep X platform. I have other funded accounts with them through Tradeovate, but I really wanted to make the switch to TopStep X because I really like their TradingView integration. So I decided to get some evaluations with TopStep X, and I ended up passing it today. So we'll get that funded account probably next week. But anyways, jumping into the video now, this strategy means you have to stop trading minis. You do not need to trade minis, and I'm going to show you why. So let's go ahead and just switch. We're going to switch this to MNQ. All right. So we're on the MNQ. MNQ is $2 a point. Now, if you're on $150,000, I'm going to use a $150,000 prop firm account. Your drawdown, your maximum drawdown is $4,500. So I'm going to use that and those numbers as an example in this video, and I'm going to show you how you can keep your account. Right. So one point on a micro in the NASDAQ is $2. All right. The goal is for you to be wrong as many times in a row as you possibly can without blowing your account. And I'm going to show you exactly how to do that. So now let's start with this, right? Let's just say we're going to pick an entry. Okay. So obviously we're trading hindsight because the market's already did its thing today, right? So we're trading hindsight, but let's use this area as an example. We saw a massive sell-off. We want to enter long. Let's just say somewhere around like 430, right? So we're going to enter long 430. I'm going to draw like a little line right here. And I'm going to say this was our entry at 430. Okay. So that was our entry. Let's just say that we're doing three. I'm actually going to add to this too. And we're going to say we're doing 3 micros. All right. We're not trading minis. We're trading micros. The cool thing about micros, guys, is that you can have a 60-point stop loss and it not be a thing, bro. Like if you're trading a mini, that 60-point stop loss, one mini contract, that 60-point stop loss is going to be a $1,200 loss. Whereas trading 3 micros is going to be, what is that? So 60 points, $2 a point. That's 120 times 3 is what, 360? So now that 60-point stop loss is $360. I think I mathed that right, by the way. That is now, it's now a 360-point stop loss versus a 200-point stop loss. And then we could target complete upside, right? But anyways, let's just say for the sake of this video, right, we're going to do a 50-point stop loss. So what would that be? We're entered at 430. That would be 380 would be the stop loss. So 380, which is actually a pretty good stop loss area right below the lows here. So let's just do 380, right? That's going to be our stop loss. And I am going to move kind of slow over this video, but I really want you guys to understand what it is that I'm doing here because this is super important. Super important for you guys. All right. So now we're going to say that our stop loss is 380. Oops. Okay. So now We have a 50-point stop loss. One point on a micro is $2 a point. That's $100. That's a $300 stop loss, right? We're only risking $300. Let's just say, for example's sake, you were wrong trade after trade. How many times would it take you to be wrong before you blew your account? Well, let's do the math. 4,500 divided by 300, right? That's 15 trades. You would have to lose 15 trades in a row for you to actually blow this account. Now, if you're losing 15 trades in a row, you need to practice more, right? But you're allowing yourself 15 trades before you blow an account, okay? Now, what do we want to target, right? So here is the beauty of this. This is where that risk to reward really starts to amp up and help you make more money. Now, we entered at 430. Just to recap, we entered at 430, right? We have 50-point stop loss at 380, so we're risking 300. Let's go ahead and put that down here too, right? So we're risking 300. Okay. All right. So we're going to put that right here. We're risking $300. Now for upside, let's just say that we think, for example, we are going to at least trade up into this previous resistance zone or support zone here. Okay. We're not going to target VWAP just yet, but we think we are going to trade this previous zone. So once we get confirmation, right? So we start to go up. We remember we ended at 430, right? We're up, let's say it goes to right here, about 460, actually maybe test this previous resistance here at 477, right? 480, let's just call it 480, all right? So we're going to say that we're now trading this 480 zone. Okay. That's a horrible line. I apologize. Hold on. Let's see if I can move that up here. Okay. Let's just say that now we're trading 480. All right. Now we're gaining confidence in this trade that we're going to move higher. Okay. So now what can we do? Well, we're trading 3 micros. We have a good risk. We can add to our position. We want to add to winning positions. Don't add to losers. Unless you're accumulating in a zone, you don't need to add to a losing position because then you're just doubling down on your loss, right? So let's just say that here we're confident that we're continuing moving higher. So now we're adding, let's just say we'll add 3 more contracts. Okay, so we're total 6 micros. All right. So we added 3 more contracts. Now we're in total with 6 micros. That's just over a half of a mini because, 10 micros equals 1 mini. So we're just over a half a mini. All right. Now we're letting this thing go. Okay. We're letting this thing go. We come up to say we test its resistance here. Keep in mind that we don't have to expect us to blow through this support here and blow through this resistance level. Okay. We don't have to expect that. So we could take off a position, right? Let's just say we don't even ride to VWAP. Let's just say we take our position off fully at, let's go to here. What is this? 50 or let's see. No, let's call it 550. We'll call it 550 and we'll take that position off, right? And I'm going to put our text here. So we just say, that way we know. And we're just going to say we close position. Okay. Now, on these initial first 3 contracts, okay, we entered at 430. We closed at 550. All right, so if we do a little bit of math here, we do 550, was that 430? That's 120 points, right? 120 points. Now, remember, 1 micro is 2 points. Or, sorry, 1 point is $2 on a micro. All right, 1 point is $2 on a micro. So times 2 for 1. Okay, so that's 240 times 3. So on these first 3 contracts, I think I'm at that right. Hold on. 120 times 2. Yeah, 720. So on these 3 contracts, we make 720 bucks. Now on these 3, we entered at, what is this? So I'm just going to say we made, here, let me just mark this down. We made 720. All right. Now on these 3, we entered at, what was it? 80, right? Did I call that right? Yeah, we entered at 80, 480. So say 550 minus 480, that's 70, 70 points. Remember, $2 a point, and we hit 3 of them, so that's 420. So we made $420 on these. Put that together, 420 plus 720. Overall on the trade, we made $1,140. And guys, what were we risking? 300. This is the power of micros. I'm telling you guys, micros are incredibly powerful. If you use them correctly, you don't be a degenerate and start adding to a losing position over and over and over again. You're gonna win with micros, and it's gonna prevent you from blowing your account. Like I said, you have to be wrong 15 times, right? The goal in a prop firm funded account is for you to have longevity and build capital that you didn't have. Okay. And to stay in, and honestly, to stay in an account as long as you possibly can, right? And so when you use like this model of trading micros, not only are you risking so little, but you can then increase your hold times, add to positions, and actually make a good risk to reward ratio on your trades, right? I don't even know, what is this, like a 4x almost, something like that. A 4R multiple, like that's a good risk to reward ratio, right? And so using a model like this will help you keep in a funded account and stay in a funded account longer than what you be trading in a mini. So in just using mini, for example, even just one mini, guys, at 430, let's say we entered at 430 here, and our stop loss was at 380. What I say that was 60 points. Gotta do the math real quick. 430 minus 380, 50 points. So it was a 50-point stop loss, right? On one mini contract, that's $1,000. Okay, and now with that, when you have a $4,500 drawdown, you have 4 shots before really your account's blown, 4.5 really, right? You got to lose 4 trades. Only 4. Whereas this model, we can lose 15 trades in a row, and yet we still had $1,000 day trading micros. Micros are extremely powerful, and I highly suggest you guys start using these because, like I said, it's going to help you stay in the game longer. Now, if you have an account that's just massive where you're trading, $50,000, $60,000, $100,000 accounts, trade you a mini, bro. Like live a little bit. Trade you a mini. It's all right. You earned it. Okay. But when you're trading prop firm accounts where you only have $4,500 in drawdown, this is what you can do with micros, which is more than what you need to help build that account and build that capital. So guys, I hope you like this kind of content. This is an in-depth strategy video on how you can stay in a funded prop firm account and keep it and have longevity in it and build that capital to get you to a live funded account. If you like this kind of video, smash that like button, subscribe to the YouTube channel, get more daily content, and I will see you in the next video. Cheers.